Over to Sanofi management.
Thank you. Good afternoon, everyone, and a warm welcome to the investor call of Sanofi India Limited. My name is Radhika Shah, and I am the Company Secretary of Sanofi India Limited. I have with me Mr. Rodolfo Hrosz, Managing Director, and Mr. Vaibhav Karandikar, who is the CFO of Sanofi India Limited. Good afternoon, everyone.
Good afternoon, everyone.
Good afternoon.
All right, we begin this investor call. There are two important announcements before we start. First, please note that the proceedings of this meeting are being recorded. And second, please note our standard disclaimer that certain statements in this call may be forward-looking. The actual results may be affected by many factors that may be different from what is envisaged in terms of future performance and outlook that is being discussed today. Moving on to the agenda of this call, we have divided this call into two parts. In the first part, the management will make a presentation covering the strategy of the company and the performance for Q4 and FY22. In the second part, the management will take the questions from the investors and participants. The Q&A is likely to end by 3 p.m. All investors and participants are requested to keep their questions brief and avoid repetition. I now hand over the call to Rodolfo and Vaibhav for a quick presentation. Thank you.
Thank you very much, Radhika. We can go to the first page. Good afternoon again to everyone. Next. And let's go to the next page. I think we went through the disclaimer already. We can go to the next page. Very well. So just a quick snapshot of Sanofi India. 67 years of commitment to India. Top 3 pharma multinational company in the country. 3 brands within the top 100 in the pharmaceutical market in India. Nearly 26 billion Indian rupees in total net sales. Sanofi India Limited, listed company with approximately 127 billion market cap, 2,300 employees, operating across India with 3,000 distributors and 100,000 pharmacies reached. Strong industrial presence with a very strong manufacturing site in Goa and 12 CMOs, exporting to over 60 countries around the world with 5 billion tablets produced yearly. Strength of legacy brands, 70% of our Sanofi India Limited business stems from 7 top brands which are well entrenched in the country. Next. And in terms of our ownership, 60.4% is owned by the promoters, with nearly 10.5% retail shareholders, and then nearly 32% owned by institutional investors. We note that there is an addition of nearly 50% in the number of retail shareholders in the last year. Next. Before I continue, given that snapshot of Sanofi India, I wanted to just take a moment to put in front of you the vision statement of the Sanofi Group globally. At Sanofi, we chase the miracles of science to improve people's lives. Now, next, 1/5 of that statement can only be fulfilled in India. 1/5 of people's lives on the planet is in India, right? So India, soon to be the largest population on Earth, is expected by July this year. So counting down the days, theoretically, 125 days until we're the most populous country in the world. Next. And population which is driving India's economic steady growth. As you've seen and you follow and you know even better than myself, very steady economic growth in the recent past, projected also into the future. Next. That is also true when we come to healthcare. Healthcare is poised to benefit from this economic growth as gaps in healthcare close over time. Healthcare's GDP, percentage of the GDP in healthcare has increased dramatically. It is projected to be 2.5% of GDP by 2025, doubling in a 10-year period, which is quite phenomenal. This is, of course, a consequence of the strong commitment of the Indian government to healthcare. And we've seen many programs that promote healthcare being deployed by the government, such as the Ayushman Bharat and the 8 Years of Health India, promoted by the Prime Minister himself. Next. Within that market, we see some trends that are of particular attention towards Sanofi India. First of all, if I start from the upper left box, we just mentioned strong macroeconomics, strong commitment and support from the government, which will make India the fastest pharma market, fastest growing pharma market in the world, right? Now, within that, we still see lots and lots of opportunities for growth, which project a very interesting scenario for this market altogether going forward. Take, for instance, the non-communicable diseases treatment gap. It's a huge gap. 50% of patients with NCDs are untreated in India. 50% of patients treated for NCD are not on treatment goals. If you take diabetes, for instance, 76 million diabetes patients. Only 40 million of these of that population is under treatment and diagnosed. Then if you go down to number of people in treatment, the number goes down many millions more. And at the end, there is only 20 million on treatment goal, but with another 10 that are under treatment but not under adequate treatment. So the gaps are throughout the different stages, from diagnosis to getting to treatment to getting to the right treatment at the end, which represents an opportunity and a gap that needs to be closed, and also an opportunity for growth. That is one example in diabetes, but many more exist in other NCDs. Another key dimension, a key element of the market in India, innovation has represented more and more a driver of growth. If you compare that on the upper right corner, 2018 and 2022, you see how much more innovation represents a significant portion of the growth of the market in total. Also, when you look at not only the portfolio, but the way we engage with HCPs in the country, it has transformed. Through COVID and post-COVID, we see an increased adoption of digital channels by HCP, adoption of a hybrid reach model for reps and visits and conferences and events with doctors. More than 1.3 billion cell phone connections in India provide a ready platform to drive digital health initiatives in this field. If you go to the trade, we see fast modernizing trade channels, right? Pharmacy chains are clearly outpacing the market. They're growing more professional. They're consolidating and expanding in India. Distributors are modernizing and consolidating. Old mom-and-pop organizations are becoming more professional, consolidating in smaller and bigger groups, and modernizing their ways of operation. Hospital chains continue to expand at a fast pace, outpacing the market as well. So see clear modernization in the trade in general. And if we focus even more, it goes to e-commerce. It is a very clear acceleration that you all are aware of, with e-pharmacies expecting to grow an annualized rate of 40 to 45% between 21 and 27. The penetration of e-pharmacies in the country is about to reach 17 million households by 2025, coming from only 9 million in 2022. So significant trends, significant important trends that we pay attention to when we talk about our plans going forward. Next. When you talk about the portfolio of Sanofi India Limited, we're well positioned across 7 of the top 9 therapies in the India pharmaceutical market. This chart shows you the therapeutical areas in the pharma market, from biggest to smallest. And you can see that in 7 of the top 9, Sanofi India Limited is present. We're present with penetration in subcategories that ranges from 7 to 61%. So there is room even for us to continue to expand our penetration in the subcategories, all of the categories where we're playing, and also our market share for still significant opportunity to increase market share within those categories in which we play. Over time, we have been able to, we can move to the next slide now. Over time, we have been able to build very strong leading brands in these segments. Lantus is number 1 in its segment, Allegra the same, Combiflam number 3 in pain, Amarillo, Cardace, and Clexane all number 1 in their respective segment. This is not to mention Targoseed and Frisium, also brands that are leading in their respective segments. But these 6 making to the top 200 of the pharmaceutical market in India. So significant achievement from the past. Next. When we talk about the past, in Sanofi India, we are pretty proud of the past. Strong brands were built, solid quality reputation for the company in the market. We're one of the top 4, top 3 multinational companies in India. With a very senior and capable leadership team and very experienced teams across the organization that have been responsible for the building of these brands over the years that we just mentioned. When you think about the future, we see a very attractive future. We see a resilient economy, both in terms of GDP as well as in terms of the currency for an emerging market. We see healthcare gaps that exist but are being closed through growing healthcare budget, which leads to a fast-growing market that we believe is going to continue to be the case for many years to come. India is also a market where brands make a big difference and live very long. And we are a brand company. Not only that, India is also a strong talent pool, not only for ourselves here in India, but globally, as you know, and see and can attest yourselves. In the next slide, we talk a little bit about the present. If we're proud of the past and attracted to the future, when we look at the present, we see some strengths. And in terms of strengths, we see that our insulin business and our consumer healthcare business are of particular interest, given their representativeness in our business, given our market share and relevance in the Indian market, and given the fact that these 2 segments of our business grow ahead and above our own average growth. So they are today already growth drivers of the business in India. Next. At the same time, when we think of the opportunities that exist in the present, we see a number of factors that can be improved. First, we can focus more on growth drivers. We just saw 2 main, the current driver engines of growth. We believe we can focus even more on those. We can leverage more on local opportunities as opposed to depend too much on the global strategies only. There's lots of local unique opportunities in India that we can tackle, and we intend to do so. We can improve HCP centricity by having bigger baskets and fewer reps calling on the same doctor with a fuller basket of options and better service to those doctors. We can expand reach by reducing overlaps in our current coverage. We can regain innovation momentum, where in the last few years there's been few introductions in Sanofi India. There is opportunity for us to do a lot more, both with global products that exist in Sanofi India can be brought to India, and also with local opportunities for innovation that can be produced here locally as well. There is an opportunity for us to master the emerging markets and modernizing channels. We aren't completely up to the modernization that has happened in the trade so far. There is an opportunity to build partnerships for reach. There's different potential partners could help us take our product through a more capillary distribution and capillary reach within the country. And we think there is opportunity in the ways we work to drive more empowerment and more agility as well. Now, with all that in mind, we took a step back in the leadership team in the last few months and devised a new plan to accelerate the growth of the business in India. We called it India for India. Sanofi's India for India plan. Next. In this chart, you can see the 4 pillars that we devised as growth pillars for the business going forward. The first pillar is, of course, diabetes. our biggest and stronger business in Sanofi India. And there we believe there are three main elements, three main opportunities that we want to tackle. One, to strengthen the positioning of our portfolio. We have a range of products, and we can dedicate them to specific segments with more clarity. Second, we believe we can expand the spectrum of offering. We're one of the large, across the board, full spectrum or fuller spectrum players in diabetes. We have oral diabetes and injectables as well, and we can and intend to expand the fullness of our offer for this disease. Also, we believe there is an opportunity for us and a need for us to engage with stronger disease awareness initiatives to facilitate the understanding of this disease and potentially the therapy associated with it. When we go to the second pillar, our second focus for growth going forward is consumer healthcare. In that pillar, we have a very strong business, a thriving brand with Allegra, which we want to double down on and invest even more to accelerate its growth. To do that, we also believe we need to deepen our consumer understanding in order to unlock triggers of growth for this business. And we can expand its range as well, leveraging an array of products that exist in our global portfolio. Third pillar for our growth is end-to-end innovation. In there, we see three elements. First, we can and will leverage to the maximum extent possible our global portfolio with products that exist in the global portfolio of Sanofi that aren't here in India yet, plus explore many possible adjacent local innovations, projects that have been developing in India for India needs that we intend to pursue. The second element in that pillar is to explore further supply localization. Today, we have a significant portion of our sales in India that is already produced in India. We believe we can localize even more. There are a number of advantages from that strategy, from reliability, from reduction of cost, and also to be aligned with the Make in India campaign from our government. Right. Third piece of that column is to seek and establish partnerships that can allow us to extend our reach in this vast country, taking our products to every little city, every small city around the different across the different states. The fourth and final pillar of our strategy is the go-to-market pillar. In there, again, we have three elements. The first element is to build a customer-centric and hybrid model, which we have begun to do in a redeployment that took place in Q4, which I'm going to mention a little more in the next slide. The second element in go-to-market is the creation of a trade organization that caters the whole portfolio of Sanofi India to our trade partners, be those distributors, pharmacy chains, e-commerce companies, or hospitals as well. But looking at that interface with more attention and elevating it to a world-class interaction with those partners. The third element on that go-to-market pillar is to drive pilots of transformative nature, be those in the way we deal with e-commerce or in the way we engage with HCPs or in the way we manage our key accounts in the country. In the next slide, we speak a little bit about the Q4 deployment. So through the months of Q4, we deployed a new ways of working in India, which included a reorganization from 8 business units to 3, addition of an innovation function and team, addition of a trade function, and organizing a team under that function. The number of HCPs reached by the field force increased, even if the number of reps is constant. It is only possible because we reduced overlaps, and that allowed us to reach more HCPs with the same number of reps. Our key accounts and hospital coverage was established, and it's in the process of being implemented. And there has been a change in resource allocation from a historical basis, marginal variations, to more insight-based and insight-driven going forward. I think with that, I conclude. Next slide. I hand over to Vaibhav to tell us a little bit more about the numbers of this period.
Thank you, Rodolfo. Good afternoon, everyone again. As Rodolfo mentioned, the Q4 deployment was presented in the previous slide. So the quarter 2022 was the first quarter when this deployment model was put in place. It is also a quarter which is largely a comparable quarter. If you recollect, we sold the nutraceutical business in September 2021. And when you look at Q4 22, it is therefore a largely comparable quarter because the effect of the divestment is not seen in this quarter. There is an impact of sales of soframycin and some other exceptional items. But if you look at the quarter in question currently, on a published basis, when you look at the retail business, we show a degrowth of 2%. But on a comparable basis, there is a growth of 3.8%. We had some challenges in this quarter in Targocid, which is one of our big brands, which Rodolfo talked about, where we had some supply issues. That is one of the reasons also why you have a slightly negative domestic retail business growth of -2%. On a profit before tax basis, you can see that we are up 33%. Again, on a comparable basis, we would be up 22%. What we have taken here from a comparison perspective is ignored the soframycin related impact. We've also equalized the exceptional exports growth in this quarter. In the sense, as you see, export growth is 26% over the previous year. So we have equalized that impact also. And therefore, when you look at it from a pure comparative quarter basis, we are, from a profit before tax, we are growing at 22%. Operating efficiencies also, which Rodolfo talked about, both in resource mobilization, deployment, has kicked in during this quarter. And as we go along, we will also see that in the next quarter as we go along. Full year performance, the domestic retail business, again, same, -2%. And if you look at excluding the exceptional items, which I talked about here, it's of course, there's an element of nutraceuticals, there's an element of soframycin, there's also an element of the COVID impact that we had in 2021, where we had exceptional sales during this period. If you look at all that, there is a restatement of around the comparable sales number around 3.7%. Profit before tax on similar lines shows a degrowth of 5%, but on a comparable basis, it is 6%. Overall, as to summarize on this slide, the Q4 22 is the first quarter where it's largely a comparable quarter, and it can, from a comparison and a growth perspective, it is easy for us to monitor Sanofi performance quarter on quarter from now on, because the exceptional impact largely diminishes going forward. Next slide, please. I just wanted to put this slide just for anyone to know. We talked about divestments in the past by Sanofi. So there are the two graphs on the top talk about the CAGR on the retail business and CAGR on a published basis. That means including the divested portfolio. If you see that the CAGR for the full portfolio, included the divested portfolio, is in the range of 5%. And our CAGR, if you consider the retail business purely, is 7.2%. So that means on the retail business portfolio, the focus is clearly there, and that focus helps us in delivering better results in the areas that we want to look at going forward. And we also talked about being present in 7 out of 9 top therapy areas. Quick comment on the profit before tax. If you can see, the margin profile has improved. We were at 22% in 2017, and since then you can see that the growth is steady. This is of course profit before exceptional items, and we are now at 28% as profit before tax to sales. So the margin profile clearly shows an improvement over the years. There have been questions on dividend. I think Rodolfo talked about the strategy. The strategy is essentially about global innovation, using global innovation, using local innovation. Localization of manufacturing is also one part of our strategy, but important to note that the localization of manufacturing is largely by leveraging the contract manufacturing network in India, which is where India has a significant amount of strength, and of course the partnerships. To summarize, even if you look at all these three initiatives, they are the growth that we are talking about with global local innovation partnerships and localization of manufacturing. It's largely an organic growth. And therefore, looking at this particular organic growth momentum in the future, the cash needs of the companies were also assessed. And if you can see from 2017 to 2022, our normal dividend accordingly has increased, because when we generate cash from a cash cycle point of view, we are very positive. And with an organic growth focus going forward, looking at the cash needs, you can see that the dividend payout percentage has increased steadily over the years, and that's reflected in the chart. And I think that's something which we wanted to share with all the shareholders as well. The concept and the rationale behind it, this whole payout is also linked to the way the company is thinking from a strategy point of view. So I stop here. Quick recap on the financials, and I'll let Rodolfo take it forward. Next, please.
Yeah, I think before we conclude, then I think the final message from our side is that we are stepping up our game on ESG. So we have developed those first integrated report. We'll be disclosing ESG figures in our upcoming annual report for the first time, aiming at robust governance structure to drive responsible and ethical business culture beyond compliance. Those will be the central points there. This will allow us to leverage the very strong CSR initiatives that we have undertaken over the years in Sanofi India Limited. So we'll be able to organize that in a clearer way and communicate about that also with more clarity going forward. I think at this point
we close. Thank you so much, Rodolfo Weber, for your presentation. Before we move on to the interactive Q&A session, which is planned, just quick comments. We will respond to your queries within the boundaries of our internal policies and SEBI regulations. As required by law and our policies, we will restrict the responses to clarify on matters which are already available in the public domain through our annual reports, quarterly financial statements, and disclosures. There are many granular aspects of our business or financials, such as product-wise or state-wise, therapy-wise sales, margins, profitability, which we consider confidential. Hence, we will not be able to comment on some of those aspects. We do not provide any earnings guidance, and hence we will not be able to respond to the queries on future business or future product launches, etc. You may please raise your queries accordingly. As I had mentioned in the exchange communication, we will take the questions in the sequence based on your registration. In case of multiple registrations from the same participants, we will take questions from the first registered participant and give others the opportunity at the end. In the interest of time and for keeping equal opportunity for all the participants, please limit the number of questions to 1 or 2. I now hand over to the chorus team for taking on the Q&A. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question over the video presentation may click on the live interaction button on your screen. Please allow access to your microphone and camera and click on join. The operator will announce your name, after which you will be requested to unmute yourself. Participants who wish to ask a question via phone may please press star and 1 on your touchtone telephone. You are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Girish Shetty from Banyan Tree Advisors. Please go ahead.
Hi, ma'am. Can you hear me? Hello?
Yes, we can hear you.
Okay. So thanks for the opportunity. My first question is on Lantus. So just wanted to know the quantum of price cut and from when will it reflect in our financial statements? And also, we wanted to know how is the arrangement with the parent in terms of sourcing and profitability? And just wanted to understand if the parents will absorb the part of the price cut in case of Lantus. So that is my first question. Then I'll ask the second one.
Any other questions?
Yeah, we can start.
Okay, so currently the draft prices have been notified by the government. We have 3 Lantus SKUs, and there are ranges of price cuts which have been communicated as per the draft price notification. It's the average price cut is approximately 25%. However, two things or two caveats to point out. It's a draft notification. The company has made some representations in terms of the mode of calculation and inclusion of certain SKUs, and the government gives time typically to companies to make representations, and then based on the representation, there's a reconsideration of this. So the final prices are not notified yet. So we await the final price notification and the consequent reduction, if any. Having said that, in case there is a reduction, we have clarified on this platform in the past. There is a certain margin profile which we have for the imported product business, and that's on arm's length basis. And therefore, in case there is a drop in profitability below the arm's length, this will be compensated by the group. Effectively, it means the purchase price of the product will drop, and the discussion will be taken with the group companies for that. There may be a short-term impact depending on the inventory that we have, the carrying inventory. But to answer your specific question, the purchase price of Lantus from the group will be reduced to ensure that the arm's length profitability is maintained.
Okay. So just a follow-up. Just wanted to understand, because it is an arm's length transaction. So is there any tax liability or any legal implication where you have to change the transfer price agreement to incorporate this, that the parent will reduce the price for Lantus? And any other instance where this has happened in the past, that post a drug price coming at a price control, that the parent has taken a price cut? Just wanted to understand if this is a normal practice in the industry.
So as I mentioned, arm's length, once your profitability is arm's length under the income tax rules, there would be no tax litigation, because arm's length is a reflection of the statute. That means you have to be compliant, and therefore to be at arm's length is not an option. It needs to be done. And therefore, to answer your second question, it's not a choice or that we have. It's something which is mandatory, that needs to be reflected as per the income tax laws.
Okay, understood. Okay, that's it from my side. Thank you.
Thank you. We take our next question from the line of Amay Chalke from 3P Investment Managers. Please go ahead. Amay, could you please unmute your microphone and go ahead with your question? Mr. Amay Chalke, could you please go ahead with your question? There seems to be no response from this line. We will therefore move to our next question. That's from the line of Bhavya Sangvi from Nirmal Bang. Please go ahead. Bhavya, could you please unmute your microphone and go ahead with your question? Yes, please go ahead. There seems to be no response from this line. We'll take our next question. That's from Gagan Thareja from ASK Investment Managers. Please go ahead.
Yeah, am I audible?
Yes, Gagan. Go ahead.
Yeah, so the first question is around Tresium and Cardace. I presume the revised NLEM pricing also impacts Tresium and Cardace, if I understood it correctly. So can you help us understand the impact on these two? And also, I mean, will the WPI linked price increase that will come through in the next year, to what degree will that help you offset what impact happens now?
Okay, so in case of Cardace, as you know, the plain tablets are under price control. The average reduction that we expect is in the range of 14% for Cardace, looking at each SKU, some similar to Tresium. The next WPI increase, the question that you have, will be in April 2023. The current WPI, if you see the traction, it is not as high as previous year, which was at 10.7%, but As per the law, the government needs to give you a WPI increase in line with the index, and we are hopeful that the same when it's published, it reflects the same numbers. So to answer your question on WPI, depending on the final government notification in April, the price changes can be implemented.
Right. And between the impact that you'll see on Lantus and Tresium and Cardace, while you have arrangements which might help you offset the impact to a certain degree in terms of transfer pricing, what impact would flow down to your profits, assuming that the current notification is the final one? To any degree, if you can help us understand that.
Yeah. So as I mentioned, we don't give specific product profitability guidance, but the profit margin as percentage to sales would be maintained whenever we do an arm's length adjustment. Does it answer your question?
Yeah, it helps me understand this. And Lantus hasn't grown this year either. I mean, the impact will only come through in the next year, but what's been the reason for Lantus not growing this year? Is there a market share loss?
I'll take this one, Vaibhav. Lantus' performance this year was negatively impacted by a high focus of the organization behind the acceleration of Toujeo. Toujeo grew very strongly, and part of that growth came out of Lantus. So in combination, we had Toujeo growing very strongly at a very high rate, as you can analyze from our numbers, and then the consequence is that there was a reduction of focus and reduction on the sale of Lantus. Going forward, this is going to be analyzed, as I can't talk about the future here. But this is true. It happened, and it happened because Toujeo received most of the focus of the organization, and it grew very steady in 2022.
Right. And going ahead, I mean, what would be, if you could enumerate and, if possible, also help us understand a little detail of the new product introductions that you intend to do through the listed entity. I understand that Sanofi as a group might introduce new products in India, but what would come through the listed entity in terms of numbers as well as therapy focus of those products, which you could help us understand that bit a little.
Yes. Yeah, everything we discuss here is Sanofi India Limited only. So everything that we discussed and the slides that we share with you, they are related to Sanofi India Limited. And in there, we speak about innovation, right? So that's not the private arm of Sanofi in India. That's Sanofi India Limited. Now, as to which products and numbers, we don't disclose that. So we were unable to answer that part of your question. But as I mentioned, the slides I shared with you are about Sanofi India Limited. In there, you see innovation listed. So part of your question is, are launches going to happen under Sanofi India Limited or not? I mentioned that it is our plan to pursue those launches for Sanofi India Limited.
And when you say you want to increase local manufacturing footprint, if you could give us some idea of how much gets manufactured locally and what do you aspire to do, let's say, over the next 3 to 5 years? Is it possible to understand this in a little more detail?
We can give you the specific numbers in terms of which percentage will change in terms of our local manufacturing. I give you the information that we see that as an opportunity for the future of the business in India. A large portion of our portfolio is produced locally. We have a very big and very important site in Goa that produces many of the products that we manufacture, that we commercialize in India. Plus, we operate with nearly 16 contract manufacturing organizations in India that also provide a great part of what we sell in India. We believe there is opportunity for even more. As part of our portfolio is imported, we think some parts of this portfolio that is imported could eventually be produced in India as well, improving reliability, costs, and being in line with the Make in India campaign.
Thanks. I'll get back in the queue for more. Thank you.
Thank you.
Thank you. Our next question is from the line of Tarang Agrawal from Old Bridge Capital. Please go ahead.
Hi, am I audible?
Yes, sir.
Yes.
Hi. Okay, thank you. Thank you for the opportunity. I've got 3 questions. One on insulin glargine. If Toujeo grew at the cost of focus on Lantus, did the overall insulin glargine franchise grow in calendar year 22 over 21? That's number 1. Number 2, in your presentation, we did see a lot of focus around wanting to expand partnerships to grow this business. If you could sort of elucidate further in terms of what do you mean there. And the third, over the last 2 years, we've seen you shedding a reasonable chunk of your business, the tail brands and the tail businesses. Is there possibility of some more of it going forward, or we should now see that sort of ending? Thank you.
All right. So let's take each one of the questions. So starting with the last one. So we don't disclose our M&A plans, but you did see that the divestments that were made improved our growth or compound annual growth rate in sales growth. So we do that intelligently, evaluating when is it that we should compete ourselves and when is it that we should divest. So to that question, I can't answer you more than that. I mean, if opportunities are correct and if the value creation for the shareholder is adequate, then we would always pursue different opportunities in M&A, but we don't have any specific plan to discuss with you, right? I think your second question was about the overall glargine. Yeah, overall glargine has gone up. Yes, it did go up. It grew so how much?
It's 2% on a full year basis.
2% on a full year basis altogether. Yeah. And there was another element in the question.
Right. That was around, you spoke about
partnerships.
Yes.
Yeah, partnerships. We believe that there is potential for us to partner with other players in the market to make our products more readily available to a larger percentage of the population in India. Right? So today we have a footprint in India, as I mentioned at the beginning, with 3,000 distributors who reach 100,000 pharmacies and will reach a number of doctors. We believe that by partnering with certain with different potential partners in India, we can extend and increase our capillarity, get to more doctors, get to more patients, get to more pharmacies, and get therefore our products to more patients ultimately is that's the belief. Now this is one thing that we'll be exploring going forward.
Got it. So would it imply a lot, maybe perhaps some out-licensing deals? I think that's probably what you seem to be suggesting. But is in-licensing a proposition? I mean, given that you have a very deep connect with your HCPs, and there are portfolio gaps even in your diabetes franchise. So would in-licensing possibly be a probability for a business?
At this point, partnerships like I described is a very ample territory that we believe can aggregate value for the business. No one specific type of partnership has been defined as the goal going forward. We don't exclude in-licensing or out-licensing. Those are both viable potential types of partnerships going forward. There is no specific partnership in the works in that sense, and we don't exclude any of these types going forward.
I understand. Thank you.
Thank you. Our next question is from Vishal Manchanda from Systematics. Please go ahead. Vishal, could you please unmute your phone, unmute your connection and go ahead with your question? There seems to be no response from this connection. We will therefore move to our next question. That's from the line of Varun from Bryanston Investments. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yes.
Yeah. Thank you for arranging this call. So the MD spoke about Sanofi's presence in fastest growing therapies. But what we are seeing is in oral diabetic and cardiology segment, the treatment is shifting to newer class of drugs. So for the brands like Cardace and Amrel, what is our strategy to remain at the forefront?
Not sure I got the question entirely. So, could you repeat?
Yeah. So you spoke about Sanofi's presence in the fastest growing therapies. But what we are seeing is in oral diabetic and cardiology segment, the treatment is shifting to newer class of drugs. So for brands like Cardace and Amrel, what is our strategy to remain at the front end?
Thank you. Now I understand. Yes, we do evaluate different sub-segments of the therapies. What I showed you is that we're present in 7 of the 9 largest therapies in India, right? And we think that there are sub-segments. And I mentioned that we have a varying range of penetration in those large 7 categories. We constantly evaluate which other sub-segments of these categories we want to enhance our presence. So we're constantly evaluating that, and that's a good observation. So yeah, it's part of our constant ongoing work to identify potential segments of interest, and therefore then we make plans to penetrate in those segments of interest as we go forward. So that's something that we constantly look at.
Okay. And how large is the calcium and vitamin D?
If I may connect, sorry. If I make it to give you a little better answer there. So that will connect back to the innovation pillar, right? So we won't innovate for randomly, right? So innovation as a pillar for growth for Sanofi India will be grounded on specific opportunities in specific segments of high growth. So just to try to give you a little better, more complete answer based on what we share with you already. Sorry for interrupting you. Go ahead.
Okay. And how large is the calcium and vitamin D3 market in India? And how do you think is Dupura position in the oral market? What would be our ranking in general? And how large is the pediatric market? Because that seems to be our area of focus.
I didn't hear you very well again, so could you repeat?
Yeah, so I just want to understand how large is the calcium and vitamin D3 market in India, and how is Dupura positioned in the oral market, and what would be our ranking in general, and how large is the pediatric market within this, given that it is also focus area?
Thank you for the question. Very specific question. I don't know from the top of my head. I can't answer you right away. I think we may be able to provide an answer after with those numbers.
Yeah, sure. We've noted your question. We can go on to the next question.
Sure, ma'am. We'll take our next question from the line of Cinderella Carvalho from JM Financial. Please go ahead.
Am I audible?
Yes.
Yes, Cinderella. Your voice is breaking up a little.
I hope this is better.
Yeah, this is better. Thank you.
Just want to understand if you can share with us what is the current NLEM exposure as a percentage of sales?
Yeah. Yes, let me check that. Bob, can you confirm?
So you're talking about the total current portfolio under NLEM?
Yes.
So currently it's at around between 15 to 16%, and in case Lantus gets included in the price control, which is likely to happen, that number will go up to 40%.
Right. And as you were earlier highlighting, if the WPI index related increase comes in, how much of impact will be able to offset? Can you help us understand that?
I mean, the WPI needs to be notified by the government, but we are expecting in the range of 8% plus.
Okay. And as of now, based on the notified Lantus segments, what is
Cinderella, I think there seems to be some network issue at your
the impact
end.
that we are anticipating?
Cinderella, I'm sorry, but you'll have to repeat your question. We couldn't hear you.
I was asking, considering the three strengths which have come under NLEM from Lantus perspective, what would be the tentative impact to our understanding?
So I would, as I mentioned earlier, the impact in terms of reduction for the largest
on the top line?
The largest SKU impact is around 25%. And as I mentioned, the bottom line impact will be limited because it will be a pass-through from a perspective of the gross margin, essentially, back. So I will not specify the impact as of now because it's still draft prices. I'm giving you a range.
Okay. And if we look at the brand selection, what is the reason for a huge decline that we are seeing on a MAT basis? Can you help us understand that?
So it's Clexane. So it's because of essentially 2021, we had a huge peak because of COVID, and I talked about it when I spoke about the financials, and we talked about the normalizing impact. Last year, during COVID, we have a significant spike in sales, and that has an impact in 2022 when you look at it on a comparative basis.
So from this year onwards, we should expect a normalized base going ahead. Is that a correct understanding?
Yes, you can say. In terms of the impact of COVID, etc., being out of the question now, going forward, it's more normalized growth.
Okay. And there is no NLEM impact expected in that brand, right?
Clexane is already under price control. And every 5 years, there is a revision in prices. So there is a re-averaging impact for Clexane also.
Okay. And if you look at the gross margins, we have seen a quite benefit coming to us. Is this sustainable, and what has driven this?
Are you reflecting to the quarter 4?
The entire year as gross margins.
So when you look at overall gross margin percentage or the material cost percentage, there's a slight improvement. I mean, I'll not necessarily talk about it from a point of view of the future. There are a couple of factors to think through. There's a mix impact, of course, which is important. And the product mix, especially in the domestic segment, can have an impact. In case of exports, the strengthening of the euro from the beginning of the year to where we are today, that also gives us some benefits. I will not comment on the future sustainability of the margin, but yes, there is a slight improvement in margin structure, and if all things remain equal from a mix point of view, you could expect the same set of margins. Having said that, you need to monitor. There are a few levers for this, which is domestic business, export business, mix between the two businesses, and the mix between the domestic business, which would have an impact. So I can't give you a specific direction, but yes, the margin profile as a material cost of sales is currently maintainable.
And what would be our going ahead strategy focusing on the top 10 brands? Are we envisaging any strategy specifically to grow these brands? Because our growth has largely, even if I consider the retained brands, it has been around 7% CAGR. So how should we look at it? And given that we'll have some impact on that.
Yeah.
So what is the thought process? Any color will be helpful.
Nirala, with going forward, what we shared with you in the beginning is our pillars of growth. One is to focus on the diabetes brands and CHC brands as the key growth for the business going forward. So we're going to be doubling down our resources and investments and attention and focusing on these two categories to drive the brands within those two categories harder and leverage the already existing positive momentum on these brands. So I think that's the extent to what we can disclose with you, which was part of the presentation in a way, right? So it's not the top 10 brands that we're driving. We're driving CHC and diabetes and CHC with a heightened focus and increased resources behind those brands because of their relevance, because of their good momentum, and the fact that they already grow above our average. So we're doubling down on our growth engines.
Yeah, thank you so much.
Thank you.
Thank you. Our next question is from Vishal Manchanda from Systematics. Please go ahead. We've unmuted your mobile connection, Vishal. Please go ahead.
Thank you. Am I audible?
Yes.
Yeah. So my question is on insulin aspart. You received a regulatory approval from the DCGI. Would you be able to launch this drug in India this year?
It shows me, but I couldn't understand.
Yeah, you'll have to repeat your question. Your voice is breaking up in between.
So my question is on insulin aspart. The CDSCO approved insulin aspart for Sanofi this year.
I'm not sure. We'll check and get back to you. From Biocon and
This is an insulin, mealtime insulin that you got approval for.
New insulin that was approved. What is the insulin that was approved? Aspart. So we'll get back to you. Go to the couple of questions that we're going to do some research and get back to you before we close the call. So let's get to it.
Okay, so then we take the next one, please.
So there is this question on the insulin and there is
market share on vitamin D3.
Vitamin D market share, right? So we come back to those two.
Okay.
Let's keep going.
Thank you. We'll take a next question from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi, good afternoon, and thanks for a detailed presentation. Okay. So I have a few questions on that. It is good to know the strategy, but can you tell what were the actions taken in last 1 year, especially on ground, and the actions you aim to take in CY23? So in terms of actions, what we are trying to understand is, was there any new product introduced or you are planning to introduce? Because I don't think in last 2-3 years we have done anything on that front. Okay. You have stated that you are focusing on innovation, okay, or reinvigorate the innovation process. But what have we achieved till now under you in last 1 year? Can you elaborate something on that? And where are the gaps you are thinking?
Yeah, very good question and allows me to clarify one point. The plan that I have shared with you was developed in the months after my joining the company, right? So that is a joint plan developed with the leadership team in the second half of 2022. As I mentioned, we did deploy a new organization and ways of working already in Q4, right? And that is one element that we could act immediately. Obviously, when we talk about innovation in our market, in our industry, it isn't immediate, right? So the moment you commit to innovation, you put resources behind it and you start to work on it. But due to the nature of innovation in the pharmaceutical industry, with the many needed approval gates in terms of development, quality, regulatory, etc., it takes time, right? So you could not see any impact from the moment this plan was conceived in Q3 2022 till now, because this would be impossible, right? So the plan aims at bringing innovation to the market. It will happen in the coming quarters and years. But it will happen in the coming years, let's put it this way. But it could not have happened immediately. Not in consumer goods, you would be able to, decide to innovate, and tomorrow you're innovating. In our industry, it takes a little longer. So what action was taken since the plan was put in place is the deployment of Q4, which we highlighted in our presentation, where we changed the organization from 8 to 3 business units, enlarging the baskets offered to the doctors when we connect with the doctors, and extending the reach of the organization by reducing the overlaps that existed between the 8 business units that were run in the business up until then. So that, of course, will have some time to mature, and there will be some time for us to see the full benefit of the changes that were made in Q4. But that happened in Q4, and we think that even in Q4, we already see some impact from those changes, and we continue to see that as we go. So I think that, I don't know if that answers your question, but it's important to clarify this is not a 3-year-old plan. This is a 4 or 5 months old plan that we have just recently deployed.
And also just to supplement that, I mean, what Rodolfo was talking about, the fact that very clearly there is an acceleration on the global and local innovation that has been planned in India for India. But if you look at it in the last 2 years, there is this deployment of launch of Toujeo in cartridge form, which is not available anywhere else in the world. Using the 2-star pen, which is a specific India kind of an innovation, which is launched only in India. It's not launched in 22, but if you look at it between 21 and 22, there has been a clear uptake in Toujeo because of this launch of the cartridge. There is also clearly Allegra nasal spray as one of the additional products that we talked about in 21. So there is the movement in the innovation pipeline from Sanofi. Rodolfo clearly he was referring to the fact that the acceleration that is reflected in the presentation is more going to come in the future years.
Okay, one more question. Partially, I would say partially, okay, because you are saying you are starting to put more resources, but can you elaborate more in terms of number of men you have increased, or number of amount of money you are spending more on R&D? So that is what the action on ground means to me, okay, but that is not what I am hearing anything about, okay. Okay, we can take this thing further, but yeah, then the next question is, diabetes is the important focus area, okay, or you are trying to increase the franchisee of that business, okay. But can you elaborate in last 1 year, or means, because we are doing this call every year, so that's why I am asking, okay. How much has the doctor's prescription increased for Lantus and Toujeo, or the patients we are serving increased in last 1 year with our diabetes franchisee? Can you elaborate on that, and how much has the penetration of ours increased, okay? Because this is the number one priority, but if you can give the actions these were taken, this is what we have reached in terms of distribution reach, doctors reach, what was in comparison to 1 year or 2 year back, that is what we want to hear about, okay? But yeah, that's one of the questions.
Maybe the first part I'll take on the... Yeah. So maybe the first part I'll take, you made a specific comment about increasing of headcount, increasing of expenditure on R&D. So when you look at the global innovation that Rodolfo talked about, this global innovation is essentially the pipeline which comes from the parent to us. We don't need to spend on the R&D for that global pipeline. Similarly, we pointed out that the local innovation also, we leverage on the CMO network in India. We did talk about in licensing opportunities, exploring those. So when you look at pure R&D, as I said, whether it's global or local innovation, we don't need to put upfront cash on the table for getting the products that we need for our team. The second question is from a pure increase in sales deployment or sales force deployment. Again, if you see the slide that Rodolfo had presented to us, it was more on the smart way of resourcing. instead of repeating calls on the same HCP by different people, we talk about ensuring that the messaging is done more efficiently. So it's also about efficiency more than the number. So we are looking at this more holistically rather than only looking at it from a point of increasing headcount in absolute terms. So I hope that answers the first part of your question, and I also could take care of the second one.
Yeah, I think the second point was you were asking for some specific numbers, right? Like Vaibhav addressed the point on the investment in R&D, and it's not really the right measurement for trying to understand the level of innovation that will come through in Sanofi, because we leverage innovation that is developed globally, right? So we don't actually do full R&D here, and we already have resources dedicated to R&D that we just use more intelligently and more efficiently to localize global innovation to the Indian market. But I think one number we can share with you that you asked to know how much more research and focus have we put on diabetes. We have put another 200 people in diabetes. So there's an additional. We have strengthened the diabetes business coverage with 200 people in our ranks. So a significant step up from what we had before.
Okay, and in terms of prescription, how much have we expanded our diabetes franchise? Can you give some idea? And the presence in terms of doctors you are reaching currently versus, let's say, 1 year back?
Yeah, I don't think we can disclose those numbers, but let me check here with my colleagues. I think can we disclose it? Yeah. So there's 2% increase in prescriptions for our insulin.
So from an overall patient coverage point of view, we had around 6.5 lakh patients in 2020, and that has gone above 7 lakhs in 2021, and the focus continues in 2022. So the number of patients is, of course, a reflection of the number of HCPs that you reach. Yeah.
Okay, thank you for the replies.
You're welcome. And thank you for asking a question that allowed me to clarify the fact that this is a new plan, right? Not an old plan that we've been operating for long. It's a new plan that aims at accelerating the business and driving growth going forward through these 4 pillars that we laid out: diabetes, CHC, innovation, and go-to-market. Thank you.
Thank you. We'll take our next question from the line of Abdul Kader Puranwala from Elara. Please go ahead. Mr. Puranwala, please go ahead with your question, sir. There seems to be no response from this line. We'll take a next question from the line of Saurabh from Multi-Act. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes.
Yeah. Sir, I needed a clarification on Lantus. You said that around 25% would be the impact because of NLEM. So was that on a particular SKU or on the blended sales for Sanofi?
It was blended for Sanofi, but as Vaibhav mentioned before, the prices haven't been set yet. So we will only be able to assert that, what is the exact impact on each one of the different SKUs once the prices have been set by the government, which hasn't been the case yet. So this is directional decrease, estimated directional decrease, and there is still a debate on the final prices that is still open.
Sure. And my second question was, hello?
Yes,
we can hear you.
Yeah. So my second question was with respect to the revised transfer pricing agreement that you might set in with the parent. So is the goal to have a fixed percentage of margin on the sales that we will like to maintain, or the absolute profitability which we are doing right now, we wish to maintain that particular number?
So the arm's length profitability is on a percentage, and it's not fixed. It evolves every year based on benchmarks and comparison. So therefore, I cannot say it's going to be a fixed percentage. But having said that, purely if you look at it from an arm's length profitability point of view, it's a percentage of sales that we look at to ensure arm's length.
Sure. And just if you could answer that, what would be like Lantus's margin versus a company average margin? Would it be significantly higher or on a similar line?
We don't disclose product profitability margins like Radhika mentioned, so I will not be able to share that information.
But you can infer that from our arm's length principle, that will be protected, right, locally.
Okay, sure. Yeah, thank you.
Thank you. Our next question is from Sameer Deshpande from Fair Deal Investments. Please go ahead. Request you to please unmute your microphone and go ahead with your question.
Hello.
Mr. Sameer, yes.
Hello. Actually, I joined late, so I would like to know one figure the sales we had last time of nutraceuticals and soframycin, etc. included. So excluding that, on like-to-like basis, what was the growth in sales for the current year?
Like I mentioned in my slide, if you look on a comparable basis, it's 3.7% for the retail business. And excluding if you don't adjust, the COVID impact, etc., the published number is -2%. But on the comparable basis, considering the high COVID impact of 2021 and some other issues on product quality and supply, it's a plus 3.7% growth.
Okay, including the pricing impact and reduction in volume, etc., that adjusted that.
Purely the comparable, yes.
I think we need to move to the concluding question, and then I want to get back to the two questions that we were not able to answer immediately, and provide some information to those that asked.
Yeah.
So I think the first one is Aspart is a competitor product, not a Sanofi product. So I don't think that we're well positioned to answer your questions in that sense. So it is something that is being applied by a competitor of ours, and then the status of that application is best known by the competitor than by ourselves. Vitamin D, we got to the number that I think you asked. The size of the market is 800 crore for vitamin D3, right? And we see it growing at 3%. But I think the question includes our market share in vitamin D. That's 5%, right? So 800 crore growing at 3% with a 5% market share for Sanofi. I hope I've answered the two pending questions within the statement.
Yeah.
Hello.
Mr. Sameer Deshpande? Yes. Do you have any more questions, sir?
No.
We are unable to hear you clearly, sir.
No, I don't have any questions. Thank you.
Thank you.
Thank you.
We just heard that you don't have any questions. What you said before, we couldn't hear. Sorry, but if you do have one, that we couldn't hear, please write and make sure to come back to you.
Okay.
Thank you.
Thank you very much.
Ladies and gentlemen, we take that as the last question for today. For further queries or questions, we request you to write to the company. I now hand over the proceedings to Ms. Radhika Shah. Over to you, ma'am.
Thank you. The shareholders will soon receive our annual report, and we will, of course, give you more details on our performance in that annual report. Our AGM will be held on 11th of May, where the shareholders will get an opportunity to interact with the company and the entire board of directors. We would now really like to thank all the participants for attending the investor call. Thank you very much.
Thank you very much, Samantha.
Thank you, everyone, for joining the call. Thanks for the great interactive session. We have made our efforts to give you the clear and most complete answers as possible. Stay safe, take care, and thanks once again for joining the call.
Thank you.
Thank you. Ladies and gentlemen, we now conclude this call. You may now